Hi, welcome back. I'm Ashley. I'm a blogger at The Frugal Ginger, and I love sharing tips to help you run your family and your finances more effectively and efficiently. So if that's something you want to learn more about, make sure to subscribe below. And you can also check out even more tips at my blog at frugalginger.com. Today we're going to talk about how to pay off your mortgage early. I wanted to share 5 things that my husband and I are doing to help pay off our mortgage as quickly as possible, because that's the only real debt that we have. We recently bought our new house about 4 months ago, and we sold our starter house that we had for about 10 years. We made a nice little profit off of it. I bought our first house for around $116,000. So when we sold it, it sold for $195,000, which was awesome. So it helped us get an even bigger down payment than we thought that we would have available for our new house. So by having that large sum to put down as a down payment, it really helped us straight out the gate. We were able to not have to get any PMI. So I wanted to share 5 things that we are personally doing and see if they may help you pay off your mortgage quickly. Now, all these tips are things that you can do realistically. You can search on YouTube for a whole bunch of other ways to pay off your mortgage fast or quickly, but a lot of times you have to have a lot of cash up front, or you have to use credit cards to do that. And I'm not going to get into that. I just want to get into some simple things that everybody can start doing, no matter your income level. If you are a new couple, if you're a family, like anybody can take 1 or 2 of these and start doing them today. Obviously, before you even buy your house, you want to get a house that is less than you can afford. Now, if the bank is offering you $300,000, don't buy a house for $300,000. Get one that's probably around $250,000 or even $200,000, because you don't want to be living paycheck to paycheck. You want to get something that you can comfortably afford. And what we do, especially with our first house, because we weren't married and you never know what's going to happen. So we got a house that we could comfortably afford on one income. So if things didn't work out between us, we broke up, which they didn't, we're still together. If one of us lost our jobs, whatever the case may be, we could still afford our house and we didn't have to worry about paying the mortgage. And whatever house you're going to get, try to put down at least 20% of the loan value, because that's going to get into one of our very first tips, is to not pay PMI. PMI stands for private mortgage insurance, and this is something that we were able to do with our new house. The money that we put down was over 20%, so we don't have to pay PMI, which is usually 0.5 to 1% of the loan value for the year. So if you buy a $300,000 house and you don't put down 20%, you're going to be paying around either $1,500 to $3,000 a year just for PMI. Now, what private mortgage insurance does is it helps the lender. It doesn't help you, just in case something happens and you're not able to pay your mortgage. This is the insurance that the lender has. When you pay PMI, it does not go toward paying off your principal. It does not go toward paying off your interest. It's just extra money that you're giving to the bank. So if you are not able to put down 20%, I know not everybody can do that. It's okay, pay it off as soon as you can. And then when you get to that 20% equity in your house, call your bank, call your mortgage lender, and cancel it right away as soon as you possibly can. Because the bank is not going to call you and say, oh, you remember that PMI that you're paying us? Do you want us to cancel it? They're not going to do that. That's free money that they're getting. And you have to be on top of that. So go and look at your mortgage statement, see how much longer it's going to take you to reach 20%, and mark it in your calendar so that on that day you call the bank and you get them to cancel it. Now, another thing you might want to do if you're just buying a home is to see how much it would be to buy a percentage point to lower your interest rate. This is something that we did for our new home. We were able to go from, I think it was a 4.2% interest rate down to a 3.2% interest rate. At the time that we did it, I think it cost around $2,000, which was worth it for us for a 30-year loan. we would definitely save more in the long run by buying that percentage point. But it's going to vary person to person if it's going to be worth it to you. So definitely sit down with your lender and do the math, figure out if buying that extra percentage point for $1,000 or $2,000 is going to save you more than that over at least, I'd say, 20 years, if not the 30 years. For us, it was only worth it to buy 1 percentage point, not 2, because it just wasn't going to be worth it in the long run. But even if you do already own your home, maybe you can call your lender, see if refinancing or buying lower percentage points is going to be worth it in the long run for you. So another real easy way to pay off your mortgage faster is to make at least 1 extra payment every single year. Now what you can do is, if you don't have a big lump sum that you can just give to the bank, you can take the total of your mortgage payment for 1 month, divide it by 12, and then that's how much extra you will pay every single month. And when you do this, make sure you specify that it goes toward the principal, not paying off more interest. You want to make it go toward the principal so that you're not paying more interest over the long run on that money. It's very important before you do this, call your lender, call your bank, see if they have a prepayment penalty. Some do this because they're losing money every time you prepay. Ideally, you will not be with a lender that does that, but sometimes, you don't think about it ahead of time. But always call and make sure that they're not going to charge you any kind of penalty for prepaying. So this is what we're doing. We're doing at least 1 payment extra every single year. Hopefully we can start doing more if my husband gets a raise or if I start making more money from my business. But by just doing 1 extra payment, it's going to save us almost $27,000 over the life of our loan. And it's going to cut down the life of our loan by 4 years and 10 months. So just by making that 1 extra payment, it really helps out a lot. Another way that you can pay it off even faster is by doing biweekly payments. So what you're going to do is take your total monthly mortgage payment, divide it by 2. And you're going to pay half at the beginning of the month, and then you're going to pay the other half 2 weeks later. What this does is it helps you pay more toward the principal and pay it off faster, so that it's not accruing more interest through the rest of that month. Just by doing this, it's going to save us around $21,000 and cut the life of our loan by 4 years. Now, most lenders will require you to have an extra payment ahead of time if you want to set this up. So you may want to save up a little bit so that you can do this. But for us, we're going to be doing that. We are doing bi-weekly payments and at least 1 extra payment every year. And I did the math and I think it's right. And it will save us $47,700 just in interest. And it's going to cut our mortgage lifetime by 10 years. So by making bi-weekly payments and 1 extra payment a month, we're gone from a 30-year mortgage to a 20-year. And you can go to mortgagecalculator.com. I'll leave a link to it below just if you want to check it out. But this is how I did all the math to figure out how much it would save us by doing extra payment or 2 extra payments a year. And it has some advanced calculations so you can see how much bi-weekly will help you, as well as adding in some extra payments to kind of give you an idea of just how much it can shorten your loan and just how much it would save you in interest. And then the last little tip of how we're paying off our mortgage faster is just by living frugally. I mean, hello, this is the Frugal Ginger channel. We're a frugal family. We do a lot to live comfortably, but within our means. So we shop sales, we use coupons, we're not ashamed of it. We use coupons proudly. We don't buy brand new things all the time. We reuse stuff. I have a full video that I've done about frugal living tips you can do for 2020. And I'm putting out a video next week about things that I just don't buy anymore. And it's saved us thousands of dollars. And you can check those out if you just want to get some ideas about ways that you can cut back, some ways that you can save some money that you can then put toward your principal of your mortgage and pay it off even faster. So there's just some 5 quick tips that really anybody can start doing. If you don't have a huge lump sum to put down, you know, start saving up now. Every little bit helps. And even if all you can do is just make 1 extra payment a year, it's going to save us over $26,000 just making 1 extra payment a year. I mean, can you imagine how much we're going to save if we're able to do 2 or 3? It's going to be awesome to be completely debt-free. And I hope that these tips will help you get debt-free even faster. Make sure to subscribe below if you want to see more videos like this, and I will see you next time.